In the final stages of World War II, specifically in 1944, the Bretton Woods system was born, ushering in the gold standard. This intricate aimed to streamline financial interactions between the US and its allies, with each nation's currency being redeemable for a fixed amount of US dollars. The dollar was then exchangeable for a preset quantity of gold. This technique indirectly backed participating countries' currency with gold, alleviating the need for them to hold sizable gold reserves. It's vital to remember, however, that this gold conversion was exclusively for foreign participants, not everyday Americans. This apparatus, intricate as it was, expedited global commerce to an unprecedented extent, yet it was not perfect. Currencies, in essence, serve as buffers in global trade. They oscillate in response to their respective nations' economic vicissitudes. When the economy flourishes, its currency escalates in value. On the flip side, when the economy staggers, currency depreciates, potentially stimulating domestic sectors by enhancing export competitiveness on a worldwide scale. Fast forward to August 15, 1971. President Richard Nixon ended American dollar's gold convertibility, a decision reshaping global exchange to a faith-backed system. The gold standard, the erstwhile value store, encountered a price surge more than triple in the next 5 years. Conversely, the American dollar's value dropped significantly. This triggered record-setting inflation in the US for 20 years, with annual double-digit percentage price increases. Meanwhile, the American dollar's value took a nosedive in international markets, setting the stage for 2 decades of record-high inflation in the US, with prices increasing by double-digit percentages year on year, while the value of the American dollar plummeted in international markets. Now we find ourselves in a similar situation, with record-high inflation looming. In recent years, we've seen the economic landscape shift dramatically. The economic stability that once seemed guaranteed is now under threat. The rising cost of living, shrinking wage growth, and increasing economic uncertainty have all played their part. This has sent shockwaves through the world economy, leading to widespread concern and speculation. Central to this discussion is the issue of inflation, which has surged to record levels. This unexpected surge has led to an increased interest in traditional forms of wealth protection. Among the most widely discussed is a return to the gold standard, a system that once regulated the value of a country's currency by the amount of gold it possessed. This has garnered increasing attention, especially in light of the global financial crisis of 2008. So, was abandoning the gold standard a mistake? This question ignites a fiery debate amongst a broad spectrum of thinkers, from renowned economists to influential financiers. A significant faction believes that this decision marked the initial stages of the decline of America's economic hegemony. They opine that this move represented the start of a slippery slope, setting the stage for future instability and economic crises. On the contrary, contrasting group posits that it was an essential measure. They argue that this action emancipated the currency from a burdensome and archaic system. It consequently liberated the global economy, providing it with much-needed flexibility and resilience. Others, however, argue that it was a necessary step that freed the currency, and by extension the global economy, from an unnecessary burden. In conclusion, the gold standard, its introduction, and eventual termination have had significant impacts on the global economy. This monetary system, characterized by its reliance on gold, played a pivotal role in shaping international trade. With its implementation, global commerce reached new heights, opening doors previously unimagined. Nonetheless, it wasn't without its share of issues. A prime example was the 2-decade-long period of high inflation experienced by the US. These economic challenges were direct consequences of this system. Fast forward to today, the world confronts similar economic uncertainties, prompting a revisitation of past financial structures. In such context, pondering whether the readoption of the gold standard could mitigate present economic difficulties is a question worth exploring.